Welcome everyone to M2UNED. This podcast is titled The Miner's Edge, Thriving in Bitcoin's Volatile Market. My name is Sudhu Arumugam. I'm the Chief Product Officer here at M2, and I have with me Marco Tarman, the lead mining manager at Nicehash, and Asha Siddiqui, the Dubai division of CryptoMiners International Group. Welcome, folks.
Hello, thank you.
If I maybe make a start by asking you, Marco, to just introduce yourself, Nicehash, and what you guys do.
Yeah, so my name is Marco, and I've been with Nicehash for 7 years now. Before I started mining in 2012 with my GPUs, I've been mostly mining altcoins. Of course, in the beginning, we started with Bitcoin mining. Then in 2016, I set up one of the first hostings here in Slovenia. We managed about 200 kilowatts of GPUs. After that, the price of electricity went up in Slovenia, so I joined Nicehash, and I've been with Nicehash since then.
Fantastic.
Just to talk a little bit more about Nicehash. Nicehash has been around for 10 years, since 2014. And our core product has always been the same. So it's hash rate marketplace, or as I like to say, it's spot on demand hash rate marketplace. Basically, it's a platform where buyers and sellers can meet to sell or buy the hash rate in real time without any contracts.
Cool, thank you. I'm going to come back to you on some of those terms, because even I, after 8 years in this space, I'm still unfamiliar with the miners versus mining pools, for example. But before we get into that, Asha, would you like to give everyone an introduction and background on yourself and the company as well, please?
Sure, exactly. I'm Asha Siddiqui. I'm working with CryptoMiners for the last 4 years. I'm in this industry for the last 7 years. We started in 2018, coming and exploring and understanding the market. Since then, I'm working. Earlier, I was in sales and marketing, then officially came to the operations and managing Dubai division at the moment for CryptoMiners. CryptoMiners, what I found out that on this level, CryptoMiners is the only company in the whole world which has several branches located in zones, which includes Portugal, Uzbekistan, India, Bahrain, UAE. In UAE, we are going to have 4 branches, and the aim is to manage retail sector and the institutions along with the government. I will speak about these plans and projects, with the time here.
Fantastic. Thank you for that, both. So if we kick off with, Bitcoin mining has clearly evolved significantly since its inception. How have you guys seen mining operations change over the years, both in terms of sort of technology and scale? Maybe start with you, Marco.
Yeah, sure. Well, from the beginnings, nobody had any clue what they're doing. It was just true believers. And this was the time where there was one CPU, one vote idea. And shortly after, people started to recognize that they can make money on it with mining. Since then, it wasn't that much about securing the network anymore. And since that point, we're seeing more and more businesses entering the industry, and majority of these miners are treating the mining as business, not as something to secure the Bitcoin network directly. And at the early stages, there was a lot of knowledge to be learned. There was a lot of experimenting, whereas now everything is very specialized. Let's say there's companies doing just one part of the mining farm and not running the whole operation themselves.
Got it. I mean, look, maybe just for my benefit, even though I've been in crypto all this time, and also for our listeners and viewers, Asha, can you pick up the difference for us between what a miner or who a miner is, or what mining is, and what mining pools are, and where do you guys, Nicehash, I know, are a mining pool, and we can chat about that a little bit, but where you guys are within that kind of distinction?
So, okay, let's make it very simple for the people. For the mining, there are just. You want me to explain something about mining for the audience, or we just start what we do in mining here?
No, generically, as an industry, the difference between mining and mining pools, say, because we hear those two terms all the time. Are they the same? Are they different? And then what specifically within that do you folks do?
Okay. So the difference between mining and mining pool is they are interconnected to an extent, but mining is the basic essence, is the basic work, is the basic, you can say, the program where you get the rewards on the basis of the of the of of the hash rate contributions towards the blockchain. As a return, you will get the reward. So this is called mining. What is mining pool? You need to connect. You need to connect your hash rate uh, to a part where everyone makes sure that they have received the reward as per their hash rate contributed towards that particular pool. If the pool hits the reward, everyone will get the share as per their contributed hash rate. So there are different mining pools. Nicehash is one of them, which is known by everyone in the region, and we are also collaborating with them on a different level soon. So this is the difference between mining and mining. Mining pool has some sort of the fee of contributing or giving your hash rate to them. And now the mining pools are competing with each other, or you can say they are improving themselves in order to have lesser fee for the miners and getting the more share of Bitcoin in order to control, in order to dominate the market.
Thank you for that. And Crypto Miners Group is within which specific segment, or both?
No, we are fully into mining only. We are not inventing the pool. We are collaborating with the higher pool, same like Nicehash. We are working with F2 pool. Now there is one more pool, I guess, Nicehash, Marco, 21 pool. So if you see on the daily basis, particularly for Bitcoin mining, I'm talking. So we are working with different pools because we want people we want to give them choices. We don't want to push them to one particular pool. So if we have choices of different mining pools, it would be easier for us, and customer will understand more about the difference between pools and their pricing, their commissions. So currently, we are working mostly with F2 pool, 21 pool, and Nicehash.
Fantastic. Marco, as a platform that facilitates mining, how have the needs of miners changed over the last few years in industry, like technology advancements? What have you seen coming that could change the way that the mining pools work from a Nicehash perspective?
Yes, from Nice's perspective, we grew up mostly with a lot of GPU miners. And Nicehash is known that we made mining simple because back in the day, GPU mining especially was very hard. You had to install the software, run different commands in the terminal to start the mining. Whereas we made a software that simplifies this process. And this was the area where there was still a lot of hobbyist miners, smaller miners. And basically, there was, as I said in the previous question, there was a lot of education to be done. So we focused heavily on educating the users on how to run the miners, how to monitor the temperatures, how to overclock, etc. Whereas lately, in the last couple of years, there was a big shift from GPU mining to ASIC mining. One of the biggest reasons was obviously that Ethereum went to proof of stake. Okay. And these ASIC users, ASIC miners require different kind of approach. They, as I said, are more business directed. They're mostly businesses running mining to earn money. Some of them, of course, are about securing the network. But yeah, the future is more about finding what technologies, what ways are there to improve the mining in general. So, for example, heat reuse, that's one of the technologies that can be used to elevate Bitcoin mining or other mining for that case. So there's what I'm trying to say is that it's not about technology advancements that much, but more about finding complementary technologies to work with Bitcoin mining. So how can we use Bitcoin mining to advance something else, or how that something else can be advanced by Bitcoin mining? I think that's the future.
That's the future. Asha, quick question for you. So when I think first came into this industry, China was sort of the dominant region for mining, and then there was obviously China has banned and unbanned Bitcoin said multiple times over the last sort of 12 years. But obviously, Bitcoin mining, they banned it from the government level, and that has not been rescinded to this day, from what I understand. So, as a consequence, obviously, mining spread throughout the world. Which parts of the world are now more dominant in mining, and what are the sort of reasons behind that?
So, if you particularly talk about the dominance after China's ban and still is there, the dominance went to North America, Kazakhstan, Russia. So the dominance part went to, and with the passage of time, most of the miners they went to these regions, to these countries, and they were making enough as per their commitments and as per their plans. But what we noticed, because after America, Kazakhstan, and Russia, because Kazakhstan was having some, the border issues or the border concerns with other Central Asia countries, so they cannot do it fully because even we are having a partnership with Kazakhstan, the Petroleum Police from Kazakhstan. So what we found out that there were also two types of mining firms. One are approved by government, the other one not. So there was a confusion for the people, even mining in Kazakhstan. So now there are one or two big pool, which is one of them is Inagex, and they are fully approved by the government. And the government is also charging them some kind of taxes on their mining revenues, Bitcoin mining revenues. So once these regions were done with the dominance, as you can see, GCC is also playing a major part now. M2 is well known, Phoenix is well known in this region, and now they're leaning towards other countries in GCC. So what we found out that UAE is also planning to have a dominance with definitely with VARA rules and regulation coming time to time, and we are also being ready for that. And we have seen a major recently. We have seen a major shift in UAE because of being secure, because of being non-taxable on their Bitcoin mining of their revenue, no taxes on their private as a corporate tax. Even there's no taxes for them. So we are having a big chunk here in UAE. And one more thing, UAE is also going, as you know, everyone is shifting towards. There was question came to me that what is the biggest shift in mining process? So the biggest shift is to have the efficient energy resources in order to be still profitable in mining, Bitcoin mining. So UAE is giving this chance, and we have secured some big megawatts here for the institutions, for semi-government companies, for big players, for so they are coming to this side, and this way we can understand the power, the dominance power has been spreading over all the countries which are aiming, which really wants Bitcoin mining and blockchain to be the main source or to be the main revenue stream for the country.
So Asha, you mentioned regulation just a minute ago. Is Bitcoin mining a regulated activity, or here in the UAE, or more generally?
Bitcoin is going to be a formal activity in UAE very soon, with the help and assistance of VARA and other governing bodies. They are working on the rules and regulations in order to make it a systematic and stable commercial activity for everyone. And every week, every 10 days, we are also getting we are hearing about the new rules regarding Bitcoin mining. For example, if you want to have a commercial activity as a Bitcoin mining, so you make sure you have a commercial place. You make sure you have a commercial rates in order to get you the license for Bitcoin mining. So yes, it's going to be even the Abu Dhabi Emirates, they are also mining on a government level. So for sure, it will be coming very soon.
Got it. And Marco, how are you seeing it in where Nicehash operates?
Yeah, so as some of you might know that we recently moved the company, so Nicehash, headquarters from British Virgin Islands to Switzerland. And Switzerland is known that they log their cheese in the safe. So it's definitely one of the most regulated and safe countries. And part of this decision was, of course, strategic because we noticed that Bitcoin mining and mining in general is moving into more regulated waters. And as throughout this podcast before, we discussed that there's more and more businesses doing Bitcoin mining. And as Ashar confirmed, there's more and more regulation coming. And in order to stay ahead of the game, in order to be compliant, we decided to move to Switzerland. And I believe that this will be one of the major components of mining in the future because the whole industry, whatever business you're doing, you have to do KYB. Uh, you have to identify yourself to regulation. Otherwise, you're operating outside of the regulated zone. You have to operate in less trusted countries, etc. So I see this as a crucial next step for Bitcoin, not just Bitcoin mining, but Bitcoin or cryptocurrencies in general.
Yeah. Thank you for that. I wanted to move on now to the sort of economics and opportunities around Bitcoin mining, and maybe I'll start with you, Marco, on this. Hash rate has been, one of the most sought after terms, along with difficulty and obviously the underlying BTC price. How do you see, recently, for example, we saw that both the hash rate and difficulty, I think both went up together, which, and as I understand it, those two things are meant to be inverse. What do you think is going on, and why is that?
I think there's a lot of publicly traded miners who simply want to increase their stock worth by increasing the hash rate. Yeah. So they're using their funds, which they have a lot, to grow their hash rate. And if one company grows, the others have to follow, or they lose the market share. That's why mining is not so much controlled or connected to the Bitcoin price as we would think. That's one of my guesses why this is happening. At the same time, hash price has been around 50 to 60 USD per petahash per day. So if you own one petahash, you're earning about $50 to $60 per day. Whereas on Nicehash, we are quite proud that we offer an aftermarket, let's say, for hash rate, where the hash rate is not only set by Bitcoin price, the hash price, sorry, is not only set by Bitcoin price and difficulty, but by human factor, because it's a marketplace. Buyers are competing for the available hash rate, and thus the hash price of the hash rate can grow more higher than what you will get mined on an FPS pool. That's one of the opportunities for miners also.
Gotcha. Thank you. The cost of mining, energy, equipment, maintenance, are high, are always high, and it feels like energy costs globally are just going higher and higher. How do you manage profitability in such a volatile market?
Okay, so from the miner's perspective, from the client's perspective, our costs are fixed for a year. Let's say every year we have to make different proposal and different strategies in order to be stable. But let's talk about from the miner's perspective, the investors. So they will only be profitable if they are making more money than their bills. They're paying the bills. So how it's happening? We are going towards the customized energy solutions. We are going towards efficient energy solutions. For example, crypto miners just recently got a got a big contract from Uzbek government and for doing the electricity generation through clean energy. So it's around 10 gigawatt at the moment. So this way we are going to generate clean electricity, clean power for the government, and we will buy back the surplus from them and do the crypto mining for the client. This way, it's the efficient way. It's clean energy. Even the government, what's happening for your carbon footprint. That allocation is also happening. Whoever are the major players in the region in different countries, they're just constantly watching their carbon footprint. So this way, if you are moving towards efficient and clean energy, this is how they will promote, and you will have the lesser the cost of maintaining and the maintenance and waiting. So this way, we are going to give them a stable electricity price, irrespective of the hash rate or irrespective of the algorithm of the miners they are using it. Plus, for example, the current clients who are having already they have their miners, already they have their particular terahash machines, and it's not making much because of this mining difficulty, because of this BTC, Bitcoin, volatile and all volatile pricing. So this way, what we are offering them in order to compete, in order to stay in the race, by offering them different solutions. For example, they're having their air cooling mining machines. So we have an option. Crypto miners have just created this the option to convert your air cooling to hydro cooling, the same machine, and having more terahashes. So the bills will remain same. The cost of this shift will be very minimal, but again, it will give a boost to their miners' life, and this way they can earn a hash more. This is one of the solutions.
Gotcha. No, interesting. Look, I mean, I get the point around moving to renewable energy, because I think that's good. It's needed, and it's a good story as well. Look, a lot of the criticisms that are chopped from the external world, traditional finance towards mining, is that it is a pollutant industry, pollutant asset class, right? And so, there's one thing in my view moving to renewable energy. There's another thing showing or proving that your carbon footprint and hedging it. Do you guys, Asha, maybe, and then maybe Marco, do you guys specifically sort of try to, for example, on your websites or in your sort of reporting, try to put out your carbon footprint and on how you sort of mitigate against that? Maybe Marco, you could go first.
Nice. We don't run any hardware mining facilities ourselves, because we're more of a proxy between the sellers, so the miners, and the buyers of hash rate.
Yeah.
So this is not something that it's in our domain, as we're more of a software company. So maybe Ashar would be...
Yeah.
Yes, sir. Look, maybe Ashar would be a better...
Yeah, we are working on it because it's our ethical and corporate responsibility to make it clear. If you're working in any particular zone or country, you have to follow and you have to show. This is what we are working on. It will be released on your website, on your papers, on your contracts, and as I told you, Sudhu, more VARA rules are coming. So one of the point, you can say one of the clause, is to show, is to tell, is to inform them what is your carbon footprint and how you're managing it, and what will be done in order to reduce it. So we are working on it at the moment. It's not officially announced, but we have to work as a commercial entity.
I'm glad to hear it. Brilliant. Now let's kind of spend some time diving into the financial aspects of miners. Obviously, we spoke a bit earlier on of how both hash rate and a difficulty of what's going up, Marco, and you suggested that's because a lot of miners are willing to maybe take a loss to produce more inventory or collect more inventory today because of their anticipation of price in the future. Now, I think in the 8 years that I've been in this industry, it's always been said to me that Bitcoin miners hate to sell their Bitcoin. They need dollars. They need dollars to pay for rent, staffing, electricity bills, but they don't but they want to stay in Bitcoin because of their belief in the asset class and the industry. So this is where sort of M2 has also stepped in, and obviously because of our sister company Phoenix, which is a Bitcoin miner, we know and understand the special needs of miners, and late last year and early to this year, we've been approved to create a lending program generally to crypto users, so you can deposit your digital assets, Bitcoin, Solana, and ETH on M2, and take out stablecoin loans against your collateral. Is this something that's still the case with miners? They still like to hoard, and is this why we believe that the Bitcoin lending instrument that we have created M2, which I believe is pretty unique, and you let me know, helps to play a part in this process?
Yeah, I think there's different kind of miners. Some prefer selling the Bitcoins, but I personally think this is a stupid move. I think way better move for a Bitcoin mining company is to hold the Bitcoins and to try to find ways to pay off their costs through other ways. And obviously your loan mechanism comes in handy in this case, especially with the lately we're seeing a lot of this sailor strategy, micro strategy, their Bitcoin strategy, and how they're just building Bitcoin stack. And we've seen Marathon doing the same. We've seen other companies, big companies, doing the same, of accumulating more and more Bitcoin as much as they can. And I think for Bitcoin miners, this is a good strategy also, especially if they can use M2 to help themselves with, let's say, financing the costs without spending the Bitcoins.
Yeah, I mean, I think what we've built at M2 here around, miner specific lending is, I think, pretty neat, because obviously if you're a regular borrower, you could sort of put in more collateral or repay your loan at any point. I think with the Bitcoin mining partnership we've done with Nicehash, I think, there's this third avenue of financial flexibility. So you can also choose to pay your hash rate, earn Bitcoin back into M2 against your loan. So you have sort of the first two of adding more collateral, repaying a loan, or repaying via hash, which is a very neat product I think we've built out, which I think will come in very, very useful for miners. I mean, Asha, are you also of the view that miners love to hold Bitcoin, and you see this changing at all?
Yeah, I'll tell you the ground reality, because Nicehash, like crypto miners, we are speaking directly to the investors. Once they invest in mining, all their pools and all their connections are with us. So what we noticed that, okay, it's good. Let's hold Bitcoin. Let's see after 3 years, 4 years, 2 years. We understand this aspect. This is one of the part they are interested in. But most of the people, most of the clients, they were like, okay, I bought the machine. I'm mining Bitcoin. I'm storing it in my wallet. Okay, what's next? What should I do with it? Any keeping it? Because some of the people, like, we want to use it, Yani, rather than keeping it in our wallet. It's like putting our money in the bank and doing nothing. So we discussed. Right now, we are having this dashboard for this M2. We are working on it. We are just observing. So it's awesome. The service that you guys are providing is awesome. This way, we will inform the clients and the investors or the miners. Hey, this is your BDT. You can loan it, and you can pay in your hash rate. This is the unique thing what M2 did. So right now we want to understand more about it and reflect it and inform our clients and see, because we have different branches all over the world. So once we test it, once we have all the questions answered, once we experience it, eventually we are going to test it in all of our branches all over the world. So this way people must know there are different real case users of your Bitcoin and hash rates and loaning. So it's a wonderful thing that you guys are doing, we must say.
No, thank you for that. No, we're very, very excited about this and looking forward to turning it on live. If we sort of end the segment with you two gents looking at the future and innovation in mining, we know that mining rewards comes to an end. We're in the last sort of quarter of the innings of mining rewards, and we move to a fee-based model. And obviously, there's questions around security of the network, and I think we all believe that Bitcoin will become so important that the fee income will be more than enough to secure the network, as opposed to the BTC rewards. In terms of technology advances, in terms of what you can control, I guess maybe I'm being simplistic. I think of the ASIC mining, the chip, and I think of the sort of the more and more edge around cheap energy. Is there anything else that we should think about? And also, are the ASIC miners with the end of Bitcoin coming? Are Bitmain and these big kind of chip manufacturers actually still bothered about Bitcoin mining and trying to improve capacity and efficiency, or are they sort of now moving on to AI?
Yeah, they are trying. Like Bitmain, frankly speaking, if you ask me, we are having around 5 to 6,000 miners here in UAE, and you can say 90% of them are Bitmain. So Bitmain is doing a wonderful job, awesome job in this industry for regarding the chips and regarding the after-sale service support. It's good. So if you talk about the future and how will it change, or where can we go? So we have to diversify the revenue stream. And I guess I don't know, but I feel that everyone is thinking to diversify the revenue stream. For example, with mining, you can go with HPC computing and AI. So this is a major shift which is coming up. Apart from that, smart mining pools and hedging strategies will also be considered in future. Plus, geographic and political risk diversification should also be seen, like China's ban in Paraguay, Texas, Kazakhstan in mining incentive. So I feel that overall, the group of all these factors will give us the final result or the direction for future in order to be stable and in order to have this mining industry running and operating.
If I can add up on top of that, as I mentioned before, the Bitcoin mining business is going towards finding ways to utilize heat, how to use the power that ASICs use, how to use that as a secondary product. And this is great when you have someone who's always buying your compute. And this is blockchain. Blockchain is always buying your compute. You can send how much hash rate you want, and you will always get paid. Of course, the question is how much you will get paid. But if you run half a day, you will be paid half a day worth of mining. If you're mining for the whole day, you're going to earn whole day worth of mining. Whereas with HPC, you only get paid if someone is paying. So if you have someone who's willing to spend the resources on HPC, you're going to get paid. If that means that someone is willing to pay for half a day, then you're going to get paid half a day, but the other half of the day will be your machines will be just sitting idle. And for Bitcoin mining, I strongly believe that only miners that will be using energy in some secondary way, as I said before, for heating or demand response programs, or maybe something else that we're not thinking of right now, those miners will still be mining in the future when there's less and less block rewards, and the profitability will become less and less, or lower. Profitability will become lower. Yeah, I think that's the crucial part to understand.
Yeah, people are still doing that. And if we have, listen, okay, these are the use cases of your heat dissipation. You can warming up the pool, you can do the fish farming, you can do this. We understand. But technically, what I found, these are still to be implemented all over. It's happening in one of the region or one of the part only. And we are saying, oh, it can be done. But I didn't see anything here in my region regarding that dissipation. So instead of this heat dissipation and use, now they are coming with that hydro solutions, immersion solutions, in order to focus on the hash rate rather than its bicarbonate or byproducts.
Yeah, definitely. You have two use cases. And if you compare two mining facilities with the same electricity cost, the one that has a second revenue, or maybe actually in this case, Bitcoin mining is the second revenue. And in these cases, these Bitcoin miners will be the ones less standing. Yeah, of course. Yeah.
No, I'm looking forward to watching this space. And before we sign off, Marco and Asher, first of all, thank you very much for your time. Maybe Marco, where on the 31st of December 2025, where is Bitcoin going to be trading?
Nobody knows. Who knows? It's if someone says what the price will be in the future, he's lying. I strongly believe in the long run it will go up. It will go up all the time. There will be times but let's hope the highest it goes, the better for all of us.
Yeah. From myself, I'll tell you my experience. 1 year before, exactly, so 1 year before, I was sitting with some couple of investors, and I was pitching them, or you can say I was telling them, hey, see, today we are sitting at 40K, and we have seen in 2022 69K. So 69K is nearby. So after 6 months, you will say, hey, 70 is the minimum. So the benchmark is getting changed every time, and you're so by end of the year, if you say, for me, I don't. What I feel as from the formal news sectors and people, it's like more than 140, 150K will be the normal thing by end of the year.
I love it. Of course, this is not financial advice, and please do your own research, everyone. Ashar Siddiqui, Marco Taman, thank you very, very much for your time.
Pleasure is all of us. Looking forward to share this space again, inshallah.
So, take care.